a short video on some interesting news that came in Economic Times a couple of days back. The news was that mid and small cap funds were not able to beat the index because they missed out on holding PSU Banks. So today, when the news is coming, on hindsight, they know that the sector is doing well and you should have been there to have made big gains. But when actually they started bottoming out and turning up, the moods and sentiment in the market was that PSU banks were untouchable. So obviously all the fund managers have stayed put, didn't take exposure to PSU banks. Still they have done fairly well, not beaten the market. If they had taken PSU banks, probably returns would have been far better. Like Nippon Small Cap Fund, which is one of the topmost performing funds in the market today, it is just trailing the index by a few, about a percent point. Similarly, couple of top performing SDFC Small Cap is also one fund which is doing extremely well, but they were not able to beat because they didn't have PSU banks. That's the news in the Economic Times. So our SRR helped us to buy most of the top performing PSU banks. Here is the list of positions that are there presently open in SRR portfolio because of their top ranks. These stocks have come in and many have already come and gone out giving profits. Some have come second entry after giving a profit. They have given like Canara Bank and all. It's come second time. First they made around 70-80% profit, it went out. Stop loss got hit, but the strength remained same. Fundamentally stock was still strong, and that's where it gave a buy, and after that second buy is also holding 19%. Couple of banks which came long back like Bank of Baroda are holding with 100% profit. UCO Bank 238% profit. Union Bank completed one trade, next trade is having 55%. Punjab National Bank, it was late entrant because it had the most affected bank in the public sector bank was Punjab National Bank, so it took time for them to come out with good result, and after that only it will qualify for SRR top ranks. By the time price had run up to, from where it gave a buy, today price is closing at 76 rupees, it's a 45% gain. So by using a strategy to invest into the top performing companies, both on their earnings and the stock price, it helps us to get out of the judgment and buy the right stocks. That's what SRR has helped those subscribers who are using SRR tables to benefit. So when a stock comes into top rank and we buy that stock, we are not bothered about whether it is belonging to a worse sector or good sector, because there is a parameter that selects that stock as a top performer, and based on that if we buy, of course I don't say that all the stocks that qualify to be in the top rank will perform 200-300%. There is going to be losing trades also. As of now, what we have been using stock rank report for the past 15 years now, it's about 14 years. Our history is around 48% of the stocks go on to be winners, 52% are losers. That is 100 stocks if we take, 52 will move out giving a loss. Loss can be varied, can be small loss, slightly bigger, full loss, all those things can happen. While the rest of the 48 gives a winning exit, in that at least 10 to 12% stock gives around 100+% returns. That is where the whole portfolio goes on to give big returns, because when 10% of the stocks give 100%, more than 100%, some will give like 300-400%. We can see UCO Bank now at 238, and it has more strength, more pattern shows it can go up further. Many stocks will give like 300 to 500% also. When that is there, this 52% of these stocks that is getting out with losses, there if we control the losses with a discipline of stop loss, obviously we end up having very good returns. In the last 3 months, I've been publishing this data. SRR portfolio from June 26th. Before that, I was not tracking it, though we have been investing. I separately tracked the performance of only SRR stocks, live data from June 26 till date. Today I am talking 6th of October closing price. 20.65% is the SRR portfolio returns, while NSE 500 is 7.46%. Why we are comparing NSE 500 is because top ranks can come in large cap, mid cap, and small cap. It will tilt its holdings exposure to whichever place there are more stocks that is qualifying to ranks. But the universe contains all the stocks. Today, large caps are very, very less. 1 or 2 will be large caps out of 125 stocks that are qualified at the top and been into a buy position. Majority are mid and small caps. But when the trend changes, slowly moves, what will happen is from 2 or 3 stocks from large cap, we will start getting around 10 to 15 stocks also. So it will slowly tilt towards large cap exposure. So using a SRR report, we need not do any decision making judgment kind of things. Automatically we will have the stocks that belong to the best sectors and help us make big gains. So these 8 stocks that are presently in open position in SRR are helping the overall returns gain significantly. Similarly, prior to PSU Banks, we had automobile sector doing well. There were a lot of automobile stocks. Some are still there. Many have exited because automobile has started getting weak. Already there are news flows that two-wheeler sales is coming down, though car sales is not yet. Car sales is buoyant now, whereas two-wheeler sales is coming down. Rural market is showing pain. All these things are there. That is started impacting the automobile sector, and of course it has been there going up for almost a year now, so it cannot be an infinite rally. So from automobile it's shifted to PSU Banks. Next sectors, now PSU Bank is at the top. Very soon there will be other sectors that will come up, and that will also start showing up in the SRR itself. As of now, tire stocks have started coming up. No idea if those automobiles that were sold last year or previous years will require tire replacement, and now tire businesses started doing well. But we don't have the idea about it, but many of the tire stocks are qualified in the SRR top ranks. So using SRR helps us to invest into the best stocks of the economy. That will help us have fantastic outperformance against the market itself. So like we have here around 270% outperformance in the last 3 months. On a consistent basis, if you continue to invest into the top performing stocks in the market, over a period the profits that we will be making against the market will be huge. So for those who want to take this opportunity, can use the SRR and invest into the best stocks. Thank you.